Hello, everyone. Dave, we are back live again, and I'm trying to make sure you can hear me okay.
Is it 2022? It seems like it's been forever since we've been together. And what's it been? 2 weeks is all?
Yeah, 2 weeks, and we're back together again. And I'm just trying to catch up where you were a few weeks ago. I think you were battling through something, and now here
Yeah,
we are.
yeah, I had a cold, which is over with now. But yeah, it sounds like you got it through the phone when we were talking or something.
I blame you for it for sure. Not the events I went to, but yeah, here we are.
Oh man, it's going around. I know my son was dealing with a little bit of it today. He says it's going around school, so we're back to normal, I guess. That means if we're getting some fall sickness, that means we're getting out and about and letting things happen.
Yeah. Well, we're here. We're recording live, and we're so glad that you're here with us, Dave, and all those joining us live on Facebook and YouTube. Thank you so much for being here and spending time with us. And Dave, why do we talk about retirement like this all the time, every week, consistently? Why are we doing this?
Because we really want to help people. We want to get them to a position where they can better their lives. That's one of my big goals in life is to help others make the decisions they need to have better retirements, to have better financial position because I lived both sides. I've been in both sides of the coin where I realized the struggle, the pain, the misery, the worry, the late nights, early mornings trying to figure it out versus being able to realize that life can be better. Life doesn't have to be all about worry.
And what we do, Dave, is we just so we can remind everyone is we pulled together a whole list of questions that we throw at you, all in retirement, and then we ask the audience to come on and share their retirement questions. So if you're here with us live, please go ahead and submit your retirement question. And Dave, what's your favorite topic? We talk about what 13, 14 topics. Is there one that you just love more than the other?
It's really hard to pick. I will tell you from a consumer side, it's Social Security. That's the one that we get the most questions on. Next, after that is Roth conversions and Roth accounts. But I do like Social Security. I do like talking about it because there's a lot of things people don't understand about it. But I really like all of these topics. They're a lot of fun to me. I love talking about reverse mortgage, long term care, taxes, all of the things that we deal with.
So you're not going to tell me who your favorite child is also, right?
Well, yeah, I can tell you that here, as long as none of my kids are listening. Can you double check, make sure nobody's here? Because they all think it's them. So that's what the answer is. It's them.
Good. Same with retirement. Well, Dave, I don't want to prolong this. I want to start getting some questions to you. And again, if you're here joining us live or on replay, go ahead and submit your retirement questions. But let's get Mong on here. And the question that comes in is what happens when the house is $2 million, but only 400,000 owed at age 62? Will they take the remainder?
I'm glad Mong asked this question because what it's in regards to is a reverse mortgage. And it's one of the misconceptions that many people have with a reverse mortgage is that somehow the bank's just going to steal your property. That's all they're out to do. They're going to steal your assets and you're going to get left with nothing. That is not the case. Now, there are fairly high fees to get into a reverse mortgage, but that's your only option. You need money during retirement, or you've got some investment that you're going to use. That's a wise decision to do so. You may choose to incur those fees. But once you get to the end, once you either have to move out of the home, you decide to sell the home, you pass away, and the family decides to sell the home, all you're going to owe back to that company is whatever the loan amount is. If you've got a home that's worth more than that, or if you've got a home that is worth less than what you owe, the value of the home. So they're going to take that. If you've got $2 million, you only owe 400,000, your beneficiaries are going to get 1.6 million to them. That their equity. It doesn't belong to the bank or the institution that gave you the reverse mortgage.
Dave, I'm glad you brought up that this is reverse mortgage. That's what we're talking about majority for today is talking about reverse mortgage. Now, if somebody's listening and they're saying, hey, I'm not interested in this, but I hear it talk about in the office. What advice do you have for somebody that's starting to hear about this or saying, hey, I'm interested in this. I'm just trying to figure out if it's right for me.
Do your homework. There's a lot of books out there that you can read that are very good that can help you better understand. Go to our webinars. The webinar we do on this topic, an hour and a half that we go into great detail. I answer most of the questions you'd probably have as it relates to a reverse mortgage during that hour and a half. But you want to do your homework because they can be a great tool for retirement. Now, there's only a small segment of the population that really should be using them, probably about 10%. But if you fit in that 10%, reverse mortgage could help you live a much better retirement than you may otherwise live.
And that's exactly what we're talking about today, Dave, is making sure they're making the correct choice, because we've seen people that have, or at least you've talked to people that have done reverse mortgages, and there's issues on both sides. And so we're here making sure that they take care of this properly, so there is no issues going forward.
Absolutely. And one of the biggest things that I see out there, look, all of these retirement products that we talk about here on the show that are out there, even some of our advisors are going to represent and help you get into. You've not had these for decades. You don't need to rush into it. This is one of the biggest mistakes we see in retirement, especially with the reverse mortgages. All of a sudden, someone gets with you, and within 24 hours, they've got you convinced reverse mortgage is your only option. It's got to be done tomorrow, or it's never going to happen. Look, no decision needs to be made that quick. Do your homework, understand the product, take your time. If it's good today, it's going to be good tomorrow. If it's bad today, it's going to be bad tomorrow. No need to get rushing into something that you're going to wish you hadn't have done because you got sold and you got excited and you started making bad decisions.
And I want to remind those that are here joining us live from Facebook and YouTube, go ahead and submit your retirement questions. Again, we're talking the reverse mortgage, but if you have a Social Security, Medicare, long-term care, we're here to give those questions to Dave and throw them at him and see what he'll do with those questions. And also let us know where you're watching from. It's always fun to see people from all over that are joining the show each week, because we are here every single Wednesday at 11 a.m. Central Time. And we encourage you, if you're not ready to participate this week, come back next week or the week after, because this is one of the highlights of our week, because we get to not only talk to you, but we get to talk to each other, but we get to talk about a topic that we're pretty passionate about. And it's really fun to be here.
Absolutely.
Well, Dave, let's get to my next one here from Ronald. He's asking, if you make payments, is the interest deductible on your tax return?
What he's talking about here is with a reverse mortgage, you do have an opportunity to pay it off early. So there's no early payment penalties that you may have with a traditional mortgage. Some of those are structured that way. You can end up paying it off early. If you do, you would have an opportunity if part of it went to taxes. Now, understand how the process will work. It's going to go to fees first, then to taxes, then to principal. So depending on what you're paying and how much, if you do pay a tax portion, you would get a 1098, and you would be able to take that as a tax deduction in the year you made that payment.
And Dave, as we're getting into reverse mortgages, as we're looking into this, is there also something we have to do with counseling? Because I know we've talked about this before, but I guess if there is, why?
There is, because they realized that people were taking advantage of the elderly, getting them into products that they shouldn't. So they set it up to where you do have to go through anywhere from an hour to 2 hours, depending on who's teaching the class. You do have to go through a counseling session. Now, understand that this is done through a certified counselor through HUD that's been set up with the home equity conversion mortgage for you to go through there. They've set it all up. They've approved these people. You're going to have to go through that counseling session. One thing you should know, though, they're not going to help you make your decision. They're educators. They're there to tell you about the goods, the bads, how they work, but you've got to make that final determination. Don't think you're going to go in there like you're paying an advisor like myself and be able to say, look, I'm trying to decide what to do here. Tell me what I should do. They're not going to answer that. They're just going to provide you information on the product. It has helped a lot of people from making decisions they shouldn't have, helped others make a better decision, be able to maybe get into a reverse mortgage that were on the fence. So yeah, this is going to help me have a better lifestyle because I do have a lot of equity in my house and I don't have a lot of other income coming in. So let me use that to be able to have a better lifestyle throughout these remaining years I have.
And Dave, I asked that because our next question I'm going to pull up here from Anna. She's asking, is it wise to apply for a reverse mortgage for a caregiver if you are 102 years old?
It can be. Now, when we look at it, obviously at 102 years old, you're going to get a lot of money out of here. Now, if you have no other way to pay for that, it could be a great option. If you're saying, look, I got my Social Security, it's taking care of my basic needs, but it'd be really nice to have someone here in the house that could help take care of me, to give me a better lifestyle. Definitely could be. At 102, chances are you're not going to live more than another 10 years. So if you structure it out correctly, could be a way that you can, one, get substantial money off of there, but two, really improve your lifestyle. So would not be against it at all in most situations here, because it could really improve that individual's lifestyle by being able to do this.
And Dave, again, with this, we're just trying to make sure that those who are doing the reverse mortgage are cautious. They're making sure they're looking at all of the availability out there, that they know exactly what they're getting into. Because like you said, if you rush into these things, you make decisions that not only affect you, but your family for a long time. And it's important that we take care of this and get the education out.
Yeah, and a couple of other options to look at, or at least one other, would be to look at a forward-facing mortgage. Would you be able to take money off of your current home on a forward-facing structure to where maybe the fees aren't so much? Again, when you look at life expectancy, not like an individual based upon history and what we have for longest living individuals, not like it's going to be another 20, 30 years that someone's going to be alive, but may not be able to qualify there either if you don't have the income, and reverse mortgage may be your option. They're going to just make sure the taxes, insurance, and repairs are getting taken care of. And that's going to allow you to get into there. So could be a great situation for someone to use a reverse mortgage right here to allow them to live out their life in more comfort than they otherwise would.
And Dave, Paul is wondering who holds the title during a reverse mortgage and who gets appreciation while it is in this process.
You're going to get the appreciation. So that's not going to go to the mortgage company, but they're going to have, just like a regular forward facing mortgage, you're going to have a trust deed that's going to have a lien against it from the government, basically, because these are backed by the government or the mortgage company. The government's going to be the back one through the insurance side of it, but they're going to hold that title and the lien on that title until you get it paid off.
David, and as we talk about reverse mortgage, is this popular in the retirement space? Is this something that people look to right away, or is this something people will kind of get to toward the end as they're trying to decide what to do?
There's a lot of marketing out there. It's easy to get excited about it because of the marketing, where you initially look at it and you say, hey, I can get extra money. I can have a better lifestyle, which is really what it's designed to do. But what we find is that it really doesn't work too well until you get into your 70s, maybe even as late as your 80s, because there's so little that's coming out in those beginning years. Remember, if you take money in your 60s, CR, average life expectancy, once you get to that point, 84 for a male, 88 for a female, it could be 20, 24 years that interest is accruing on there. So not only are you taking money out, but you've got interest accruing. Therefore, they're going to give you a lot less than what you may expect. So it doesn't work quite as well. You can start at age 62 and do it. But what we find is usually for most people, it's later in the retirement when they start having some money issues, which we see all the time. Go into retirement, think, I've got plenty of money, forget that there's risk, take too much money out in those beginning years. And then we're going, whoa, retirement's not quite what I expected it to be any longer. That's when people really start looking for solutions and when reverse mortgages really become more popular.
So Dave, you're telling me I may live past age 60, 65?
Yes. In fact, a good chance that you could live into your 90s. I mean, you and your wife got a 10% chance you could live into your 90s, maybe even past 100. So,
Wow. Well, it's longevity, right? I think that's the thing we talk about a lot on this show, is making sure that people understand that this is a long period of time where you're not working and you've got to have things figured out.
I was talking to a guy yesterday and he was looking at getting some insurance, wondering if he was going to get disqualified because of some heart issues that he had. And I asked him about his family longevity. He goes, my dad had the same problem when he was my age, which that I had it, which was 50. And he's lived to 97. His brother lived to 98. His other brother lived to 96. I'm like, it sounds like you got some longevity there if the whole family's living into their late 90s.
Yeah, exactly. Well, Dave, Jude's asking, is earthquake insurance required for a reverse mortgage?
It is not. Now, this is an interesting one. Some of you are going to live in areas where earthquakes could be a probability. I lived in Utah. In fact, you lived in the same area, and it was on an earthquake fault. I looked into it at one time. Many people never even look into this stuff, but I looked into it. Number one, it's outrageously expensive. Number two, most deductibles on earthquake insurance, 10% of the value of the property. So if you can imagine, you have a $500,000 home, you're going to go out $50,000 as your deductible before anything's done. So obviously most people, one, can't afford it. It's so expensive. Number two, if an earthquake happens, going to be major problems, but they are not going to require that. They will require flood insurance, something that obviously happens far more frequently. We usually know if you're in a flood zone, if that's the case, you're going to have that flood insurance.
Well, Dave, you took the words right out of my mouth. I was going to ask about flood insurance, but what other things are you seeing that are required for a reverse mortgage? So somebody can kind of just take this off the table right now if they're looking into this.
Taxes, you've got to make sure taxes are kept up with. You've got to make sure that's insured because you want to protect that asset for the mortgage company. And the third one is repairs, something that many people don't look at. You've got to keep the house in good repair. If it gets in a position where you're not taking care of it, you're going to be in violation of the loan covenants. And you may have a situation where they call that loan because the more it's taken care of, the better care you take of it, obviously, the more it's worth and the better chance that mortgage company has of getting their money back.
And I just want to remind you, if you're joining us live today from Facebook or YouTube, go ahead and submit your retirement question. Again, we have a lot of questions that come in. We want to be able to make sure we get some time to squeeze in some questions from you. And thank you for being here. And even if you're here on replay, thanks so much for being here and being part of this, because this, again, one of the things we love to do every week. Dave, I have Monica that's asking, at what age is the best for an individual to take a reverse mortgage if they have no health issues, but just for lifestyle?
I still would recommend for people to wait until they're in their 70s. Again, you can start as early as 62. Maybe it's going to provide you enough. And you've got a couple of options, whether you end up taking a line of credit option, whether you take a monthly payment option, whatever the case may be. But most people are going to want to wait until they get into their 70s, because usually during the 60s, you can solve it with other things. Other thing you need to remember, the reverse mortgage, it's not inflation adjusted. So if you start getting payments out of there that maybe, let's say, $300 or $400 a month, seems like it's working quite well for you now, get down the road 10, 15 years, you may find it's nowhere near enough for the cost that you're having because of inflation. So I would wait into your 70s. Again, everybody's situation is going to be different. Home values are going to be different. Cash needs are going to be different. But don't get excited thinking you've got to have this outrageous lifestyle when you first retire at the expense of a really bad lifestyle once you get into your 80s or 90s because you spend all your money.
Dave, let's talk about lifestyle in retirement. What does that look like? And for people like Monica that are saying, hey, I want to have that lifestyle, how do we go about approaching this in a way that we can kind of help everybody understand how important this is?
You've really got to realize that retirement's a lot longer than you think it is. We've talked about it here on the show. If you and I were to go to New York on the street corner, asked 100 people how long they thought they were going to live, and then we could go back and track them until they passed away, the majority of them would underestimate their life expectancy. They would tell us a date that was before they ended up actually passing away. So we've got to look at the longevity of this thing and realize that we've got a lot of years. Don't get into this situation. I know, again, you've got to be careful because there's some people saying, look, my family died at 68. I want to be able to vacation. I want to be able to enjoy life before that happens. Well, if you're doing it at the sacrifice of a retirement past that age, you got to be very careful. It's about going slow and steady. It's really the tortoise and the hare. There's no reason to rush yourself through retirement. Go slow and steady, stay within budgets, figure out what you can spend, keep your distribution rates down. And this may shock some of you too. Distribution rates should only be about 3% right now. If you've got $1 million, you should only be taking out about $30,000 a year. That's not a lot of money. When we look at it, the average person's taking out 5 to 8%, which is way above what they should be. So got to look at those things. And I just tell people, slow down, enjoy the roses, enjoy that retirement time, and don't get over excited to spend money. You want to be able to make sure you've got stuff set aside for the future.
Dave, I love that you talk about that, because so many people are trying to make their lifestyle work for them. And so again, you're talking this 3% and they're taking all the way up to maybe 8% because they really are just trying to make this a part of life where they can just keep doing exactly what they're doing without getting that paycheck.
And why are you spending money? I mean, that's really what you got to come back to is, what am I getting for what I'm spending? And am I getting the value out of it? One of the things a lot of retirees like to have is a second home. They want to have that vacation home. And I'm not saying it can't work for people, but so many times, and I've seen it a lot over the last 25 years, get that vacation home and then you end up using it once or twice a year. But yet you pay taxes, insurance, repairs, maintenance, all these things for 12 months so you could use it for 14 days. Why don't you just go ahead and rent that place? As hard as it may seem, renting it's going to be much cheaper for many of you. Now, you do sometimes get a lot of appreciation if you're in the right place, but that's very few people. I've seen more times than not where people have lost money on these second homes thinking that they were going to have a better lifestyle. And they get frustrated because they spend all of their time there trying to do repairs and maintain stuff. When if you go to an Airbnb that's owned by someone else, you have 2 weeks of solid good vacation.
And I think a lot of times too, Dave, in retirement, we just buy stuff. So we're talking about either vacation, second home, or stuff. I mean, there's a lot of people out there that just keep doing this.
They really do. And it hit me this weekend. We did a yard sale. I've not done one since we moved from Utah, where we just had to get rid of stuff 5 years ago. Decided, hey, let's do a yard sale. We've got a few things that we'd like to get rid of. I love the people that were coming through that you could tell that they were being wise in the way they shopped. They were able to buy clothes that we had that were still in good condition. We had a lot of baby clothes from our daughter that were in great condition. They got for $1. I mean, compare that to then I had to go buy my son a pair of shoes this week and it cost $80. Well, are we being wise in what we spend? Do we really have to have the newest thing? And is that making us feel any better than something that's gently used and allowing us to save substantial amounts of money?
I totally agree. Well, Dave, let me jump over because James is asking, we talked about earthquake, we talked about flooding, but what happens if the home is destroyed under this?
Insurance is going to kick in and do what insurance does. So depending on what the structure, and most of them are to rebuild. Now you do have some issues if you've not kept up on your insurance to the level it should be, may cost more to rebuild than you have the value to in your insurance. Meaning if you have an insurance policy that was only going to cover the $300,000 value when you bought the home and now it's worth 500 and that's what it's going to cost to rebuild, you may have some issues. But in theory, all that's going to happen is the insurance company from your home mortgage side or your homeowner's insurance is going to build it again. And then the reverse mortgage company will stay right in there where they've been.
So Dave, is this something that people are, I mean, the percentage of this happening in this situation is obviously very low, but we want to make sure that people are being prepared in all assets as we kind of work through this.
Yeah, and really it comes back to the advice I would give to people, because you're right. Not a lot of people this is happening to with a reverse mortgage on, because there's so few people that have reverse mortgages compared to the population. Talking 10% or less of retirees. And then we've got everybody that's not in retirement that, again, very small percentage. But from just a general advice side, for someone that's buying insurance for your home, you really need to put replacement value on that policy, because over time, most real estate is going to go up in value. You want to be able to replace it. I tell the story about a convenience store outside of Vegas this happened to. Ended up burning down. There was a fire and it sat empty. It didn't set empty. It sat burned for about a year. And then they started rebuilding CR and they got about 2/3 the way through and it stopped. And nothing happened for like 4 years. And I thought, okay, this is really strange. Finally went and talked to one of the people that was there, and they didn't increase their insurance. They put the insurance on about 10 years before, didn't increase it. And during that 10 years, the value and the cost of construction went up. 2/3 was all they could build. So they lost their income stream, a convenience store right off the freeway that was making them a lot of money. Now they're stuck with a 2/3 completed. They end up having to sell to a large chain, end up losing everything because they just hadn't kept up with their insurance and bought enough to keep up with the costs.
Dave, isn't that happening right now too? When people were building, or maybe just last year they were building and all of a sudden everything hit and they're all stuck right now in this limbo where it's like, hey, I can sell my home, but where am I going? I mean, there's so many other pieces we get into this, but I appreciate that story.
Yeah, and we've got to just watch it. And now's a good time to look at your insurance and to realize what's there. Now, I did hear of a new product coming out that it's somewhat exciting. Now, with the markets not knowing when they crash could become a problem. There's actually a mortgage company out there now that is allowing you to buy that second home before you sell the first home. So it allows you to get in, like someone like yourself, you would have the time to go buy that place in Georgia, get exactly what you want, put a mortgage on there, and then go back and sell your other house without having the normal income limits because of the way the market is, believing that that home will be able to get sold. Yeah.
Well, I hope to hear more about that, Dave, in some coming podcasts or some shows.
Yeah, it was very interesting. I've got two clients, one on the mortgage end, one on the real estate end, that are excited about it. It's something that's being done and piloted in Boston area, but it is pretty exciting to think in this environment, because you're right. So many people are struggling. It's like, hey, I want to move and I want to transition, but I can't find a place. Or like you, I got 2 days to go figure out where I'm going to live. Doesn't give you a lot of time to really pick what you want to do. And this would be a game changer for people to be able to maintain the two mortgages. Then when the other house sold, just use it to pay down that mortgage on the new house.
And Dave, you bring up that nugget of information, but what happens in retirement if we don't keep ourselves educated? Because it seems like there's always something changing, but we need to make sure we're always aware of those changes and making sure that we're keeping up to date.
Yeah, it's like everything else. If we don't educate ourselves, how many people out there, if you didn't educate yourself, still think the world's flat? Wouldn't realize that we had a new president in January. I mean, all these things that if we don't pay attention to what's going on, we don't even realize the effects that things are having on us. In fact, I had a conversation with someone the other day that finally hit retirement. They're like, I'm spending a lot of time educating myself on these topics, and I'm shocked at what I don't know. I thought I had a grasp of what I was going to do and the decisions I was going to make. And it's like, I had no clue that things were going to be this complex for me. And unfortunately, he's passed some thresholds that he made some bad decisions. Luckily, though, he's still got time to make some good decisions that'll help him.
Yeah, and that's the important piece. And again, that's why we're here, to make sure we do some education. And I got Armando here who's jumping on saying, thank you for sharing. He's 46 years old, thinking of his future. And Dave, how important is it that we start younger? Because if we look at 46, is that a great age to start, or is it earlier? Where do we go with this?
Yeah, for most people, it's really where they're starting. They're starting in their late 40s because that's when the kids are out of the house. If you had kids in the home, it's really where you've gotten all of the other things settled. You've usually got your house settled in and what you want to have. You've got cars kind of figured out, and obviously they wear out. You've got to buy new ones. But the earlier you can get started, Tom Hegna's got a new webinar coming out with us called Who Wants to Be a Millionaire? Helping your clients become a millionaire. I'm not exactly sure what the title is. You may remember that. But he talks about how if we start early, and others talk about it all the time too. When we used to financial literacy, we'd talk about it. But it's the time value of money. When you look at compounding interest, say, look, we can go for 10, 20, 30, 40 years versus going for 5, 10, 15 years. Huge difference, huge difference. So great that in the 40s get started. Someone's got 20 good years, 25 good years. But if we can get started in our 20s and 30s, absolutely amazing what can be done for asset growth by the time we get to our late 50s, early 60s.
Yeah. And again, Armando, that's awesome. Continue to learn and continue to get better, because as you make those decisions, you just get better at it. Because again, like you're saying, Dave, there's people who are in retirement who are saying, hey, I'm learning now. I'm still trying to figure that out. And that's a lot harder to learn while you're in retirement than when you're way ahead of the game.
And you can't beat yourself up for what you missed. That's the other thing. If you're 46, if you're 66 and you're like, look, I haven't done it, and just sit there and worry about all the things you didn't do for the last 66 years of your life, that's not going to get you any closer. What you want to do is say, okay, I am 66. I really blew it, but you know what? I still am alive and I still have opportunity, and maybe I can still go work. Maybe I can change things. You look at someone like Colonel Sanders and what he was able to do with Kentucky Fried Chicken at a late point in his life. He didn't give up. Those things can happen. We can make better decisions. Now, that being said, don't use your little bit of money you've got going into your 60s and go down to Vegas and drop it on the roulette table. We don't want that type of risk, but we still have opportunity. And one of the best ways we can do it is through education. That's what we're talking about here. Get yourself educated on topics, and then use your mind and the skills you have to be able to figure out how you can make some consistent money going forward.
Exactly. And Dave, I looked up the webinar. So the one we have that you're talking about with Tom Hegna is helping clients become millionaires. And it looks like it's on September 15th. And so you can get signed up on our website at the retirementriskadvisors.com in order to get part of that. And you can really get in and see more of the details about what you and Tom are going to be talking about.
It's really amazing how he lays that out. I had a chance of watching the presentation when he was doing it for another group. And it was really amazing to see how easy it is to become a millionaire if you start early. Now, if you're, again, starting in your 60s and trying to get there with zero, it's a lot harder, can still be done. But when you look at just giving up certain things, he talks about buying used cars versus new cars, managing some of your spending. All of those things can make a huge difference. You take that money and you invest it, huge difference in where you're going to be in retirement.
And Dave, I'll just get that popped up there. So it's helping your clients become millionaires. And again, it's September 15th, and it starts at 9 a.m. Eastern time, I believe so.
Was that a picture of one of my kids? I think that's usually what they see when they look at me. They're like, "Oh, dad just got money. We need it for this. We need it for that."
Yeah.
And that's a picture of one of my kids trying to look at me when I get home from work.
I thought it was your neighbor looking over the fence and they're like, this is all I see over there.
Yeah, we're the poor people in the neighborhood, so it's the other direction. But my kids sure think that somehow dad just ended up hitting the lottery somewhere. I'm not sure where they got that concept, but
Well, kids always think that. And then you still have kids at home where obviously they think that you're supplying everything for them. So
I had to laugh. I'll tell you a funny story. The other day, we went to the fair and there was $5 parking charge. All of a sudden, my son says, "Hey, Dad, if you ain't got $5, I got this." Like, my son never offers to pay for anything that the dad could pay for. So I'm like, okay, I'll take the money. And then my other son in the back's going, "Cody, why in the world are you offering to pay for that?" And then the truth came out. "Oh, this was money I had left over that dad gave me before. So I figured, what the heck, I might as well use it for this."
that reminds me when my wife gives me money to take my son to go do something. And when he was younger and we'd get done. And if I didn't spend it, I said, "Hey, I've got extra cash." And she's like, "Bring me the change." I'm like, "No, that change is mine." So the less I spent, the more I got back.
Yeah, that was Cody. He was happy to pay for the parking out of my money. So,
And Dave, I was going to pull up Armando's asking a question here before we get going. He's asking his question from YouTube. "I'm considering to sell my house in Georgia and move to, I'm guessing that's Puerto Rico, with his wife. Do you have client testimonials of how they made this move and has it been worth it?"
I don't know that we have testimonials. I mean, we work with hundreds of people that moved to Puerto Rico through our Puerto Rico accounting office. It really is what you're looking for. I lived there for 5 years, loved the period of time I lived there, but it was time to get off the island. There's a lot of dysfunction that it happens there that we're not used to here in mainland US, but it can be a good option. I will tell you, my recommendation would be there are a couple of Facebook groups out there that I've found to be very helpful for those who are trying to go to the island. One is Act 2022 group, and I'm not sure all the details. If you look up Act 2022 Puerto Rico, you should be able to find it. And then Expats of Puerto Rico is another one, very similar to that, may not be having the exact words. But if you go to either of those Facebook groups are full of people who are asking questions, giving information about their experience, things they should be aware of, maybe a way to go. For me, it was a great thing. Couldn't be a great thing for you, but something that's going to be different for everyone. And number of kids you have, what you're trying to accomplish. If it's just you and your wife, all those things will play into the situation. And number two, I will tell you right now, Puerto Rico real estate is outrageously expensive. And if Act 2022, which is now Act 60, the tax incentives go away, which I think they will, you're going to see a big market crash there. So I would recommend anyone to be very careful investing in real estate if you're going to move there and buy a property, especially in the main expat areas. You may get yourself upside down here quicker than you'd like to.
And I love that. I'm hoping that's Georgia and Puerto Rico, because Dave, if it is, that's both where you and I mean, I just moved here to Georgia 3 weeks ago. And so I'm excited to be here. So that's great to see. And again, Armando, keep up the goals. I think it's awesome. Really, really glad to see that. And he said, "Great. Thanks for the source." And we also have Fred jumping on and always saying, "Always good info, Dave. Thank you so much." That's how I feel, Dave. We always get enough information that just really, I feel like I can leave and feel like even if it's reverse mortgage, I got something super valuable, even if it doesn't work with me, because I'm just here to get that knowledge as well.
Yeah, sometimes it's good to know about things you may not be doing as it is to know about things you should. It's nice to know that, hey, that's off the table. I don't need to worry about that now, or it's on the table and I do need to worry about it. But a lot of times education is as much getting rid of things that you thought may be an option that now aren't as it is of saying, hey, this did open the door for me. So, and maybe on both sides of the coin, you may be on the side of the coin where you got your eyes open to reverse mortgage being an option. Someone got their eyes open to saying, yeah, I realize now that probably isn't for me. Either way, you're right, CR. It was a win. You walk away saying, hey, I got myself in a better position. I know that I'm where I need to be. Sometimes that's all it takes. I get people all the time that are reaching out saying, Dave, can I pay you for your time just to look at what I'm doing to confirm that I'm on the right path? I just want to know that I'm making the right decisions. And that's what we're here to help with. We want to make sure that we can confirm those things. Obviously, there's still uncertainty in retirement, but we do have a lot of information that we can hopefully help people with.
And Dave, before we go, I do want to bring up, we do always have so many great webinars we're part of. We have our Getting Safely Through Retirement. That is one of our favorite courses that we have coming up. And before I get into that one, Dave, I also want to talk about this one. And the reason I bring this one up is because we have this tomorrow for 4 hours together.
Yes, we do. And these are our premier webinars. If you look at it, the Getting Safely Through is our flagship presentation. This is going to be an hour, hour and a half, depending on where you go to the webinar. We've got some where we're teaching as an hour and a half class because we include a case study that's part of it. Others where we teach an hour class to get you the information and the strategies you need. And then the 4-hour class, the Changing World of Retirement, this is our master class. If you really want to deep dive into the things we talk about, 4 hours taught by myself and another advisor. So there's 2 of us that go through, each teach about 2 hours of the class. But this is where the rubber hits the road. This is where you're going to really understand whether you have holes in your retirement, and if you do, what the solutions are going to be and how you can put that all together. We give you an opportunity at the end to get connected with us so you can really start taking action on what you've learned.
And Dave, I'm only going to do this because this class is tomorrow. So I'm going to go ahead and give everybody just kind of a cute little insight to see if we can get a couple of you into that class. So if you're okay, Dave, I've got a code I can give for that 4-hour class that we could offer for those that are here live. Because once we give it, it's not going to be out there for very long. We're talking maybe an hour, then the class will be sold out.
Yeah, I'm okay with that. Usually we sell these tickets for $80. So he's giving you a great value to be able to get into here with a no fee, no cost to you, best education you're going to get. And you can't beat the price. But you're right, CR. One of the things I'll tell you, if when we open these classes up, they go fast. It's not uncommon for us within a half an hour to put over 100 people in these seats. So you want to get onto it if you want to take advantage of what he's going to offer you.
And so, of course, obviously, our Getting Safely Through Retirement's the class I'm going to recommend first. But that's one of the classes we have. But also with the Changing World of Retirement, because that one is tomorrow and it is 4 hours, it does have CPE credits for those that are interested. But for those who are there to actually get the knowledge and really in retirement, I'm going to go ahead and put the code in right now. You should see it pop up. It's first 100. So literally that is the first 100 people who sign up for that class get in at no cost. But after that, the whole class is completely shut down. Nobody else gets in. And then that's not again for until we release a new date. So Dave, I'm only going to put it on here. And then again, after that's taken off, then probably by about 1:30 today, when I release this, the whole thing will be completely sold out.
Yeah. Absolutely. Yeah. I see a question there from Armando too. Just want to jump on that regarding Puerto Rico.
Oh yeah. Let me get it on the screen here real quick. Thanks.
Yeah. Let's address that as we're wrapping things up. Armando, I'm not sure how the best way to have you reach out to us. I can connect you. Your accountant, unfortunately, is not going to be able to help you there. I will tell you that from experience and being a CPA who went there believing I could understand the laws to a level. Now I partnered up with a CPA there, and we do have a accounting practice there where we do help people with this process. I guess let me recommend go to etrendsgroup.com. Maybe that's the best option. Juan Robles is our partner there. Happy to get you connected. Try to get a meeting there, but you are going to want some advice. It's definitely not something you're going to want to try to do on your own or with your current accountant. You need the connections with the government there. You need to have someone that understands the rules because you can't get it yourself. That your accountant's going to spend endless hours trying to figure it out, and they're still not going to be able to figure it out.
And I put it on the chat there. It's etrendsgroup.com. If you click on there, then you go to the very top. There's a spot up there that says schedule now, and you can click on Juan and get on his calendar. His calendar is pretty full, so hopefully you have a spot in there. But if that's something, Armando, you're interested in, and again, Dave, I love that you have this insight for Puerto Rico because I know for a long time you picked up all of your family. I mean, you were 7 houses from me, and you reached out and you left, and it was insane.
Yeah, we were in a great position, and that's where I tell people, live so you can make a change tomorrow on a dime, and that's how we've always lived our life. That, hey, if we're inspired to go do something, we leave tomorrow and we go do it, and that's what we did with Puerto Rico. Loved the experience there. Great people, made some amazing friends, and really gave us this opportunity to continue to build what we're doing here. It gave me the freedom and the time to really work on what we're doing here with the Retirement Risk Advisors, to where we can help you get to the retirement you want. I gave me the time to create some of the material. We were able to work on a lot of the concepts that we're doing, and really changed not only our lives, but it's changing the lives of thousands of other people with what we do.
And so, Dave, I just again want to thank you so much for your time, for coming on, asking, answering all of these questions that I've asked, and for those that have joined us live today, thank you for being here and for spending your time, because I think it's so important, again, as we talk about education, is that we continually stay up to date with all of these.
And get into the webinars, you guys. Best education you're going to find. I teach classes all over the country, and I've worked with other people that teach all over the country. And the education you get through these classes, really top notch. Amazing as we see the reviews of people that have gone through there, what they say. Extremely happy with 4 hours they spend on that class to better understand what they need to do.
And I put on there the retirementriskadvisors.com. You can go click on there. So Dave, this is a good time as we're bringing this up, as we talk about all this. It's really fun to go through and talk about all the different transitions we have. And one of those is as we transition from the Prosperity Guide to the Retirement Risk Advisors, as we're kind of leaning out. So this is an important piece for us, as we started with the Prosperity Guide just as a way of educating, and now we're just kind of upping the game a little bit, and that's where the Retirement Risk Advisors comes in.
Yeah, it really was. When we originally got started, it was originally a goal for me to just do education, that myself would be able to share retirement education to people to help them better prosper in their lives. And then it grew way beyond that. And that's where we are now. That's part of the branding, as we realize who we are. We are Retirement Risk Advisors. We address the risks facing your retirement. Our goal is to get you to a tax-free and risk-free retirement. So we are rebranding. You're going to see the Prosperity Guide go away to some level here very soon, and you'll continue to see more of the Retirement Risk Advisors. But it really is because it defines who we are. There's no question about what it is that we do, how we help people. Really gives you an opportunity to understand. Not only are we there to educate you on these topics, but really to help you take action so you can eliminate these various risks in your retirement.
And so again, as we end, I just want to thank you. And don't forget, we also have a great podcast. We've got webinars. We've got shows on LinkedIn. We've got a whole variety out there, Dave. And every one of these are transitioning. And so I'm really excited that we have kind of a sneaky inside peek. Since you're here, you're already getting coupon codes. Now you're knowing about a upcoming new podcast series that we have coming. We have so many great things, Dave, as we're transitioning, because we're really, like you said, we're upping the game. We're changing everything so we can get more and more retirement education out there, so everyone has that opportunity to say, hey, when I sit down with either an advisor from our team or anyone, that they have that education already in their hands, versus saying, I just picked whatever they gave me.
Yeah. We really want to take advantage of helping as many people as we can. The more people we help, the more successful we feel like we are, the more that I feel success in my life. I'm a server. If you look at the love languages, I'm a guy that gets a lot of rewards from helping other people, from giving service, from, you ask my family, I've spent my life serving other people, and that's what we're here for. We've got to help you understand the things that you should be doing. If we can do that, I walk away happy at the end of the day and feel like I've done my part.
And again, thank you all those who have been here with us live, and for those who've been with us on replay on Facebook and YouTube. Thank you again, and for all your comments and for the love you've shown. And we'll be back again next Wednesday, 11 a.m. Central Time. And Dave, this will be 2 weeks in a row we'll be together, so it'll be exciting to see.
Yes, it will. Very excited already for next week. Isn't that crazy?
And then the third week, Dave, we're going to actually be in person again doing this.
Yes, we are. Yep. We'll be here in the Memphis area. So maybe somehow we got to figure out how we can just set it up to where it's maybe a showroom or something where we can actually be in the same room this time.
Yeah. Maybe we could even bring our special guest we'll have with us on, and maybe he can come on and talk a little bit as well. So we'll see.
Yeah. Let's see what happens.
So anyways, again, thank you so much for being here, everyone. We'll see you guys again next week.